All right, today we're diving deep into a classic Wyckoff case study. We're looking at the healthcare REIT Welltower, ticker WELL. What we're seeing here is a powerful setup, combining a strong fundamental cause with a really compelling technical effect. This could be signaling a major trend change, so let's break it down.
Okay, Section 1. A textbook Wyckoff setup, the thesis. Let's lay out the core idea behind this entire analysis. It all comes down to a fundamental principle of market structure. Now this chart right here, this really tells the whole story. That breakout you're looking at isn't just some random price spike. Now, this is the culmination of an entire year of consolidation, of supply being quietly absorbed. And that decisive move, right above the critical $200 psychological level, that's the signal, the one we've been waiting for.
So here's the thesis in a nutshell. The technical architecture is screaming that Welltower is finally finishing a long reaccumulation phase. And what comes after that? Well, the thesis is that we are now entering the markup phase. And as any Wyckoff trader knows, that's where the real money is made. It's where the most significant part of the uptrend happens.
Part 2. The fundamental cause. We're building the case for institutional interest. Technical setup this big, it doesn't just materialize out of thin air. There has to be a powerful fundamental reason behind it. So let's look at the cause. The reason big money has been flowing into Welltower for the last year.
First up, a huge strategic shift, 70%. That's the share of their net operating income that now comes directly from the high-growth senior housing sector. This isn't an accident. They've deliberately positioned themselves to ride some major demographic tailwinds.
And they're not just sitting on their hands. They're backing that focus with aggressive expansion. We're talking about a $5.7 billion acquisition pipeline slated for early 2026. And the key here, it's expected to be immediately accretive to cash flow. That's exactly the kind of growth story that gets institutional desks excited.
So let's put it all together. What does this fundamental effort look like? Well, you've got a titan in healthcare real estate. You have one of the strongest balance sheets in the entire REIT industry, which is huge. They've got bullish 2026 FFO guidance, and they're posting record revenue growth. This is the story, the fundamental firepower that justifies the technical picture we're seeing.
Section 3. Decoding the technical architecture or reading the tape. All right, so we've got the why, the fundamental story. Now let's get back to the charts and really decode the technical evidence of this Wyckoff cycle piece by piece.
Now, everything we're talking about really hinges on Wyckoff's law of cause and effect. It's a core principle. And the idea is actually pretty straightforward, but incredibly powerful. The longer and more significant the consolidation, that's the cause, the bigger the potential price move that follows, that's the effect.
So when we apply this directly to Welltower, that entire year of consolidation in 2025 has built a massive cause. And based on point-and-figure projections from that base, it points to a price objective up in the 230s. That's some serious upside potential.
So let's look at what was actually happening beneath the surface during that long consolidation. This whole range, this is what Wyckoff traders call Phase B. This is the period where the smart money, the institutional players, are just systematically, quietly absorbing every share they can from weaker hands.
Now, if we zoom in a bit, we can identify this key moment, the last point of support, or the LPS. You can think of this as the final shakeout. It's that crucial test to make sure all the selling pressure is completely exhausted right before the real move begins.
And that leads us to this, the climax of the setup, the jump across the creek, or JAC. This is that powerful, decisive move above the $200 psychological level. This is the confirmation. It tells us that supply has been soaked up and the path of least resistance is now unequivocally up.
Part 4. The trade, execution, and risks. Okay, so we've laid out the thesis. We've looked at the evidence. Now let's get practical. How could you actually structure a trade around this? And just as importantly, what are the risks we need to be watching?
So here's the look at the potential parameters. For an entry, you'd be looking for a pullback into that 206 to 208 zone. You want to see that old resistance prove itself as new support. For a stop loss, a logical place is down around 195, just below the 50-day moving average and that pre-earnings support floor. And the initial target? Based on that cost of projection, we're looking at the 226 to 228 area, which gives us a very favorable risk-to-reward ratio of about 1 to 2.
Of course, no setup is a sure thing, and you have to manage your risk. So what are the headwinds here? Well, fundamentally, there's that UK investigation into their acquisitions. Any delays there could mess with the thesis. Technically, you have to watch out for a buying climax. If this thing goes vertical too fast, it could be a bull trap leading to a sharp reversal. And then there are the macro risks. As a REIT, it's always going to be sensitive to a hawkish Fed, and you have to watch for sector rotations where capital just flows out of healthcare.
All right, Section 5. Let's bring this all home with the final takeaway.
This quote really says it all. The breakout above $200 marks the beginning of the effect phase. And for the Wyckoff trader, this is where the most profitable part of the trend typically resides. That's the key. This move above 200 isn't the finish line. It's the starting gun for the main event. For technicians, this is the inflection point you look for.
So when you step back, the picture is incredibly compelling. You have a year-long cause that's been built. You have technical signals confirming the thesis. And you have a strong fundamental story backing it all up. All the evidence seems to be pointing in one direction. So the question we're left with is this. With the cause now firmly established, is the path of least resistance clear? And will the effect live up to its potential?